So I'm glad you're here because this is going to become an increasingly important thing to you. It's already important to a great degree here in Europe. It's becoming more important elsewhere in the world. So I'm glad we're having this discussion because it does have very profound implications for the gaming industry. So with that, why don't we start off and just sort of set the stage? And Russ, why don't you give us a 5-cent tour of what is ESG and how is it defined for the benefit of the audience?
Sounds good. Well, firstly, it's a pleasure to be here, and thank you to the iGaming Next organizers. I think you've all done an amazing job. So ESG, a topic that I am personally very passionate about, as is the firm, and we're seeing an increasing awareness and consciousness. ESG, environmental, social, and governance. It's essentially an evaluation of a firm's collective consciousness for both social and environmental factors. It includes a wide range of scoring criteria and non-financial performance indicators to assess A, the sustainability of a business, and secondly, the impact of a company's products and business practices on both the planet and society. We've been investing, we've been on our own journey as far as ESG goes. We are conscious that it is climbing up. The ESG agenda is becoming more front of mind across executives and amongst board members, including media and customers. We've identified a spectrum wherein which the stakeholders within ESG kind of sits, which really kind of clasps the gambling sphere really nicely. So that's the regulators, suppliers, partners, customers, employees, and capital markets, and of course, society as a whole. It's interesting, and I'm pleased you asked the question as to how many people know of ESG. I found that already this year there's increased knowledge. Last year, I was asking some folk about ESG, and they were thinking that it may be a conference, and they weren't aware of the actual initiative and what's currently underway. There is a degree of skepticism and some politics as well, I think, behind ESG that we'll start to see, particularly, let's say, in America, where it may be politicized in certain cases. But I think for the purpose of this discussion, we're going to be delving into the importance of it, how it can be used for investment purposes, some perhaps real case examples then as well, and why this is a factor that is not just simply a checkbox exercise, but something that can be seen and used as a strategic advantage going forward, and then eventually will probably be the factor that separates the winners from the losers.
Steve, what is the status quo of ESG in the gaming industry right now, from your perspective?
I think there's a lot of talk, but not a lot of action happening at the moment. The industry in general is reluctant to share information. I'd say it's not as transparent as it needs to be. Saying that, there's a lot of open source data out there where if one wanted to, they could actually take that and build a pretty accurate picture in terms of the risk profile or not of a particular company compared to its peers. Overall, it doesn't get attention, in my view, at the very senior level. It's a C-suite problem being dealt with by a managerial level operation. So I think that's where it sits at the moment. But as you said in the intro, or Russ said, it's evolving, and we can't ignore it because investors, analysts, everyone is obsessed by this and have increasingly got to comply with sustainability. So it's not going to go away, and despite what's happening in the US, it will still grow and there'll still be requirements, whether it's going to be politicized or not. So I think it's beyond embryonic, but it's certainly growing, and everyone needs to be in the space and be ready to deal with what it throws up. I mean, the industry has a pretty bad reputation in general. So outside of it, people you talk to, the views of banks who don't want to do business with it. So it needs to be looked at in more detail by operating companies so that they can, as we're in the Investor Next forum, try and achieve more sustainable rates, if you like, for operators to borrow money or get more investors around the table than are currently available.
Okay, so I mean, I think we can delve into that a little bit further. as we go on, because I think one of the key things, as Russ and you have mentioned, Steve, and we've cottoned on to this, here we are at an investment session. The financial implications of ESG compliance, or more to the point, non-compliance, are significant. I mean, it is between North America and Europe, it is in excess of $200 billion in revenue annualized. Just from a perspective to frame it, and this might be helpful for some other comments, from a credit perspective, debt, and it often pertains to mid and large cap public companies, but it does pervade into the rest of the market just on the basis of cost of capital and assessment of risk. It's probably 50 to 250 basis points more as an ESG premium, at least, depending on the size of the deal, for gaming risk relative to other sectors. There's a factor of higher volatility, illiquidity, but also higher cost of equity capital due to ESG concerns that are not met in the gaming sector. M&A is very important. There's an M&A diligence process if you want to sell your company, or companies that are acquiring other companies. That's a key factor that you might turn to your service provider at Deloitte or KPMG or PwC or whomever is helping you with your due diligence, and that is a fundamental is your ESG compliance. It's important to regulators. It's an indicator that a company's well run. So these are all things that give a real financial flavor to this compliance and performance issue that we're delving into today. So Norbert, maybe you can comment a little bit on that, on the status quo and what you're seeing as a service provider to the industry.
Yeah, perhaps I'm not a real service provider to the industry. My background is banking, but I'll give a bit of a perspective of what I see when you see the gaming sector in parallel to other sectors at the end of the day, right? So we've spoken about ES and G, and I think in the gaming sector the focus is on the S, right? And what we see presumably at the moment is there's a lot of traction on the E, especially climate, rising temperatures. So a lot of the regulation is directed at that. Most of European policy action is directed firstly at that. Second, it's nature, right? And then third is perhaps the social stuff. And this is why, perhaps from my perspective, we see less traction in the gaming sector, right? Perhaps. So I think we need to put that into perspective, that the focus is there. It's responsible gaming or responsible or ethical marketing, presumably, right? And where the sector is going. But at the same time, we don't see that much, if you want, regulatory pressure, right? As when you compare it to the banking or the insurance sectors, for example, right? So for me, that is the perspective that I can bring. In the other sectors, you have actual supervisors pushing the ESG agenda for boards and risk appetites to change. Here, I think we're still speaking, okay, about the winners and the losers, but is there somewhere an ESG, if you want, transition plan for the sector? I very much doubt that, right? So I think that's a bit about...
So the sector is rudderless in your view and has not got a good cohesive plan to handle ESG?
Yeah, maybe someone hasn't come together yet to have that long-term plan.
Jessica, what's your perspective on the status quo from where you sit?
I think there's a lot of points have already been sort of mentioned, but I see that point of that it's kind of a trend thing, a buzzword. That's the perception of it often, and something for big companies to deal with and worry about. But sort of smaller companies won't be affected. But obviously that's quite a misconception, because there's the immediate indirect effects that the ESG reporting that the large companies will have on smaller, say, suppliers or just partners of these companies, because it will just not be possible to sustainably work with partners who can't show a certain degree of sophistication and commitment to these values. That's the one thing. But then on the point that Norbert mentioned, I think the support from a regulation side would be very helpful to create sort of that level playing field and actually make things comparable. where I think at the moment we see companies very committed to ESG values and sort of being very creative in coming up with what is measurable, what are the metrics that we can use, and what is it that we can report on. But the reports we see are very sort of different. It's a bit of a pick and choose, and what does it really tell us? What does it give us in terms of where that company actually stands? And I think some regulatory sort of alignment or guidance in that sense could be very beneficial. And also, of course, it could be extended to directly impact smaller companies as well and make it a direct concern rather than an indirect concern.
How could it impact smaller companies relative to
Well, if it was
larger?
made part of sort of the license expectations, that would be sort of the easiest, most obvious route of incorporating ESG into just being a standard thing, and also creating that standard or harmonization on what is it actually we want to report on, what is it that we want to measure and inform the society and investors about.
You wanted to chip in, Russell?
Yeah, if I may. I mean, we've seen, there are different degrees of it. ESG is a journey in itself right now, so I think it's fair to say that nobody's quite cracked it, even when we look at other big names outside the gambling sphere, but maybe connected, like a Diageo, for instance. I think it's important to understand what stage companies are at. When you look at some of the bigger ones, I see a Betson as well over there, and I know Betson have got a strong strategy and aspirations then going forward as far as ESG strategy goes. Smaller companies, as based off the previous panel, Europe is tough, right? From a margin perspective, margins are shrinking. So for many of these smaller businesses, they're trying to figure out, what do we do? Do we just carry on as we are and potentially risk having our margins shrink even further? Do we potentially look at having some sort of capital injection? That hits one of the capital market points where we know many investors are starting to take ESG very seriously. So we're seeing that many of these groups that are looking to take the next step are looking to be able to flaunt their ESG efforts. There is a lack of harmonization, even with some of the great things that we hear from the industry. The qualitative and quantitative data is not necessarily measured the same way. So I agree having that guiding star will be really, really valuable. I think one thing that we've learned from industry is that industry has typically always been quite close-knit when it comes down to keeping their cards close to their chest, when it comes down to strategic efforts. On the ESG front, I found it quite similar to the HR side of things, where people are more than willing to share some of the best practices, things that have worked, to recognize the challenges that exist. And I think that is a great way to help propel the industry. But even if we look beyond kind of investment and regulatory expectations, we all know that there's been an ongoing struggle when it comes down to talent. And we know that talent people do like to work then with businesses that are seen to be doing good, both in terms of attraction, retention, and engagement. There was a study, even from a customer basis, where we had found that 49% of bettors, this is across US and UK, are more willing to be playing with an operator that is considered to be sustainable and is able to voice their ESG strategy. But equally so, 60% of people aren't aware of what that strategy is. So I think one of the pitfalls in the industry is that when you speak to certain operators, they may be carrying out certain ESG efforts, but they may not recognize how that fits within an ESG strategy. And I think one of the challenges that the industry has got to overcome, and perhaps more in a collective manner, is to be able to voice the good things that industry is doing, and that may help move the needle as far as public perception goes, and potentially wider regulatory measures and as a way to combat the growing black market.
So, Steve, what does the industry or companies need to do, in your view, to up the ante here?
Well, let me give a couple of examples. Half the audience, roughly, weren't sure what ESG meant. So if I put it in practical terms for the industry, and this is, I'll plug our white paper. Robert and I have just published a white paper on iGaming Next's website talking about the issue of ESG and what the industry can do. As part of that, we highlighted a couple of the issues that existed. So if you take someone like 888 Holdings, when they announced they were buying William Hill, in the period 18 months, 2 years since, however long it is, their share price has gone down 60%. Now, I'm not saying that's totally down to that, but there's certainly an element of ESG issues in there that the markets don't like in particular. You look at Entain, probably one of the leading companies in terms of their ESG strategy, yet still burdened with legacy issues going back. And I still see further issues, if they're not careful, with recent acquisitions across Eastern Europe, because ultimately, there'll be some skeletons in the cupboard, and it's going to be about how they deal with those sort of things. So I think at the end of the day, companies need to be wary of that. If people in the room who operate in the UK will know what kind of market it is, what kind of negative reputational press, what kind of perception it has. And, Flutter, for that reason, are doing secondary listing in the US because there's better value there. Norbert mentioned about the banking fraternity, who don't really want to touch iGaming companies if they can help it, and if they do, want to charge a premium. I think the irony of this is if you talk about ESG as a concept and people having ESG, if you look at it, the onboarding process to get an iGaming account is far more difficult to achieve than opening a bank account requirements. But in people's perception, that doesn't sit there. So the whole series of issues revolving around ESG, such as boards and how they deal with certain things, remuneration, and also the fact that both consumers and employees want to tend to work, as Russell said, with companies that have a sustainability policy. And that's going to grow and grow in future, as I see it.
So in theory, and probably in practice, an ESG compliant company is a good company. Regulatory compliance, investment-related compliance, such as the growing ESG movement, it would suggest these are best practices that should be observed. Someone alluded to the US, the politicization of ESG in the US, where, for those not familiar, there's a couple of states in the US, Texas and Florida, that at the state level have banned ESG investing, and it's kind of become politicized. Depending on whose data you look at, in some cases, ESG compliant investments have had lower returns. In other cases, they've had higher returns. I think it's a bit of a wild west in terms of data. But at the end of the day, despite those political issues in the US, ESG compliant investing on the part of asset allocators is increasing. So no matter which way you slice it, this is something here to stay. It's way behind in the US, I would say, compared to Europe. Last year, we had the session, we talked about the re-rating of the Swedish public companies on the basis of allocators deciding that they didn't like the non-compliant businesses, and it tanked the valuations of the Swedish listed gaming businesses. These are some of the important implications that we face here. So we have a bit of a disorganized milieu in an industry that is used to compliance. What has to happen? How do we turn this ESG thing into a positive, and how does the industry organize itself to not let the ESG movement get the worst of it?
If I may, we're speaking about compliance today, but I understand that compliance is fragmented potentially by country, right, in the gaming sector. So I think gaming companies need to look a bit ahead of complying today, but understanding what proper standards will be in the future as well, right?
Yeah.
And so if you're compliant, that's good. If you're in the crisis you mentioned at 888 and William Hill are, then I think you need to be focusing on remediation and getting out of that as quickly as possible, right? But then probably the next thing to do is to look ahead. The panel before, they mentioned social betting. I wasn't aware of that until I was in this room, right? But again, to me, if I had to draw a parallel to another sector, you'd think of alcohol, right? 10 years ago, all beers, wines, gins, they were all alcoholic. Today, we're moving to non-alcoholic everything, right? So presumably, there's a bit of that as well. How much of my portfolio is social betting, whatever that definition is, right? So I think we need to think ahead. Responsible gaming. What is the definition of that? Am I going to define it myself? Fine. I don't think you're ever going to achieve a regulation which is going to say this is responsible gaming, because probably thereafter that bar needs to rise a bit more. But you need to set that standard. And again, something which hasn't been mentioned on regulation is in Europe, there is a reporting regulation which is coming our way, right? And over there, you need to be very explicit about how you're defining these things, right? And how you're remediating situations where perhaps issues arise. Okay, so I think this needs to be front of mind. So again, what am I going to do? Am I just going to tick the boxes, make sure I've hit the disclosure requirements, and put in bare minimum, disclosures in that sustainability statement, or am I going to start thinking ahead and disclosing, or using that to show if you want, your competitive advantage in the space?
So Jessica, to carry on with that, what is the opportunity to optimize around this? What should companies be doing? What should the industry be doing to take this to the next level?
Well, I think actually Steve mentioned it at the very beginning. A very important point is sort of that it comes from the top, and that it actually, the senior management level, C-level, is fully involved in it and doesn't sort of delegate it as, ESG is the new thing, we need to do this, do something. That won't lead to the results that the whole movement seeks to achieve, or sort of gives actual value.
Are you referring to larger companies or smaller in this regard?
Any, really. I do think there is a high risk of it being, whoever has the best writers in their realms has an advantage, and how much sort of is that lived? How much does it tell us about compliance? I would argue ESG doesn't necessarily tell us this is a compliant company. It does tell us this is a company that is aware of ESG and has committed to being on a journey, like Russ said, and that has a value in itself, but it doesn't necessarily tell me, is this a compliant operator, a supplier? That I think is still, it would be in an ideal if this was a complete framework that was already sort of matured. It would, of course, be a part, because it would be part of governance, and sort of being compliant would be a part of that. But I don't think we're quite there yet. And it's the regulatory compliance is sort of a parallel thing that, yes, of course, is expected as well. If you acquire a company, you'd want them sort of not to have these sort of risks that you're acquiring with the company. But I wouldn't say we're at the stage that we can automatically say somebody who has an ESG sort of reporting or sort of strategy in place is a compliant company.
Just by virtue of the fact that they have an ESG department, they spend money on it, they check the boxes.
Yeah.
All that, you think that's window dressing in many cases, or?
I think it can easily become that, especially if there isn't sort of that true commitment from that buy-in. From C-level. If it's just if it is a tick box exercise, that is what it is.
Well, and that's the big accusation of ESG, and that's something I want to turn to a little bit. So Steve and I, for our part, we've created a bit of a framework to layer on top of the different ESG providers to be able to have more granular information that pertains specifically to gaming, and that will enable it to be less accused of just being a top of the waves box ticking exercise. Other industries are doing the same. Russell, I know you're involved in some important initiatives in this regard as well. How do we get to the next level and make it meaningful for not only the individual companies, but the industry as a whole to adopt standards or processes that are to its advantage as opposed to chaos?
It's a good question. So I think there's an element of self-regulation that we're looking at right now, keeping in mind the element of game theory that exists then across the industry. There's always that balance where you don't want to self-regulate too much at the expense of competition potentially coming in and taking advantage of it. Having said that, and we've seen the story of the FOBTs, for instance, in the UK and what that translated into, there always needs to be, and hopefully the industry's learned that element of self-regulation is important. I think the more we can kind of articulate that this is, like what you were both saying, then when it comes down to coming in from up top, this really needs to be integrated into the DNA then of the organization. Industry needs to become better at publicizing it. Now, this particular initiative that you're alluding to, Robert, will hopefully help showcase to industry what some of the more sustainability-driven businesses are currently doing tangibly to help serve as kind of food for thought or a guiding star for more of the aspirational operators. Norbert mentioned the CSRD side of things, so that will come into play. So even when we're looking at companies that fall outside of scope for CSRD, I'd like to give the example of what we see, let's say, McDonald's. McDonald's is going off to all of their suppliers now and saying, guys, you need to commit to this particular threshold by this year, because if you don't, then you're going to make us look bad, and that's going to impair our score. So there's an indirect pressure, even when we're looking at the suppliers then within the industry. If you're a small studio, for instance, there are going to be pressures then from the clients that you're either working with or aspiring then to be working with. But I think the important thing is, in order to avoid it being seen as greenwashing or just a checkbox exercise, integrating it within the DNA, ensuring it's meaningful. And meaningful not just from a society perspective. There was one engagement we were looking at where through the strategy we recognized, or the company recognized, the things that it doesn't want to be specifically doing it. It's not a one-size-fits-all. Every company is different and has different motivations and aspirations. The transparency, I think that's something that Kindred's been very good at with their journey to zero in the past, and it needs to stand up to scrutiny. To stand up to scrutiny, that goes back to the harmonization point. How do you measure it? How do you continually assess it? I think the element of what we'd see success as is if we start to see more of these groups start to be able to voice the good things that they're doing, some regulatory measures then as well, which aren't overly burdensome in the first instance, to help educate the industry, and then perhaps creating some sort of ongoing forum, because nobody has the answers today. It's something that needs to continuously be refined. It's a journey for all of us. And that will come from having that pulse, having that 360-degree set of stakeholders that can contribute then to that strategy and where the industry is and how that can better support the sphere going forward.
Yeah, very well put. One thing that it might be interesting to dwell on, and I think for the benefit of everyone here, maybe to cite some real-world examples of companies that should have done better and paid the consequences for a lack of compliance. Maybe, Steve, you could cite a couple of things that come to mind and give people some ideas and focus and really give some context around this.
Yeah, I think you only have to look at the UKGC's website to see a series of failings and fines issued, which is a sort of extreme version in Europe. As Russell said earlier, the lack of harmonisation has really not been helpful in gambling, and you've got a similar situation in the US where you've got different states with different rules, which makes it more difficult. But a lot of those fines have been issued for what I would call bread and butter issues, so failings in anti-money laundering policy, people who've excluded being sent marketing emails, all that kind of thing, things that are really easy to sort out, yet continue to happen, and quite often brought on by acquisition, trying to get a further player base and stuff like that. But what has happened in the UK is those fines suddenly grow exponentially for second offences, and an example I could use, I was working with a private equity company that was looking at an acquisition fairly recently, and we just couldn't, they pulled out in the end, we just couldn't get comfortable in case there was a second fine coming for the company. It just knocked any profitability or investment potential out of it. So that's the serious consequence of what's happening with those kind of things by not committing to those kind of policies and actually carrying them through. That's an example I would use.
Norbert, what examples come to mind in your view?
What I wanted to add to that actually is we haven't seen anyone, or I haven't seen anyone really monetizing on ESG. So you can actually understand the weariness why we need to perhaps move at a slow pace, right? But at the same time, We've mentioned how important it is to be ingrained in boards, right? Discussions there. I think the message that I'd like to share is we can't only be thinking of now. So now you can't perhaps conceive how you can monetize on ESG, but you've got to put a few scenarios and say, where are we going to be in 2030, right? And at least have that journey going, right? So for me it's that, and again, I would always draw a parallel to other industries, right? Like banking. So banking, all banks trade, or most banks trade below par, right? And I mean, one can look at that and say, is the gaming sector going to end up like that anytime soon or anytime in the future? And that could be a result of over-regulation or perhaps the banks not adjusting to the speed of regulation. And perhaps that is something to try and anticipate as a sector, whether as an entity or as a sector, right? But I think presumably within the sector, regulation will continue to increase, and you always need to keep that at the forefront.
Okay, thank you. Jessica, for you, any examples come to mind or anything specific that you believe should be framed in this session since we have 2 minutes to go?
I don't have a definite sort of example of one. I think it's partly, like, we can see the relevance of it and sort of the impact that it has, but not to the degree, I think, that we will be seeing it in the future.
Right.
And so in 2 years' time, 3 years' time, we will have a very different discussion and a lot more very precise examples, I think.
So per your comment before, people need to elevate it because not only does it have real and pending adverse consequences, and there are many examples already of this transpiring, but sometimes we don't always realize that they're directly related to an ESG concern, which could be RG, could be a board mishap, it could be something else. But also going forward, the crystal ball says that this is going to become a bigger issue. We better deal with it now, or it's just going to pounce on us later.
Absolutely, and it's playing to sort of the strengths of the industry as well. To a sense, the whole CSR is not a foreign concept to the gaming industry. The sort of whole compliance side around it, AML, responsible gaming, that is already an expectation. That is sort of already the standard. Obviously, there's failings, but that is, we already have that incorporated in regulation in the license conditions. So that is then sort of already there and should, I think, in my opinion, be seen as a basis to then put commitments, ESG, of the ESG kind on top of that and sort of follow that sort of objective of how do we actually make sort of our industry a more sustainable industry and push that goal forward, because I think the other aspects are, should already be there. That's not so much aspiring to, but
The tools are there. The industry just needs to advance itself, both individually and collectively. I think what you're saying.
Yeah.
Russell mentioned Diageo, which Steve and I have looked at as well, which is the poster child for ESG compliance. It's in the alcohol business, and it fits under, for some, the sin box like regulated gaming does. However, they do a terrific job at attracting asset allocation at their level. In parallel, how that pervades down to the smaller private companies, especially given the compliance regimes that we all operate on, will be something where I think there's no downside to better compliance, only upside. Yeah. Terrific. Well, that's all the time we have for today, boys and girls. I thank you all very much for your time, and I thank our panelists for their wonderful contributions.